Um, Welcome back to the channel. Thank you for tuning in. So happy Monday, guys. What I wanna do is last week Friday, as you know, it was NFP Friday. So there was NFP last week Friday. So I just wanna quickly show you, or rather, go through that day. By creating as you've seen by the title, how to trade NFP news event. So I'll be looking at Nasdaq because I know a lot of my um, South African traders trade Nasdaq a lot during NFP, and it's like a very nice way, I guess, to trade for them. So NFP, guys, not for professionals. I don't trade NFP. Um, Going into my charts, I'm just gonna quickly mark 7 a.m. here as my as my starting time, and as soon as I put my 7 a.m. the makeup comes on. Okay, guys, NFP. I'm looking at the chart from 7 a.m. So I'm looking at the chart from 7 a.m. NFP is at 8:30. So if I want to trade the NFP, I'd be looking at starting from 7 a.m. So at 7 a.m. you see price consolidating and then creating a swing look there. Buy side liquidity there. Takes out buy side liquidity. Order block. Doesn't reach the order block, but it finds resistance. To me, it finds resistance. It's a bearish order block. At the order block, in fair value gap here, trades into this fair value gap, and then it breaks lower. Then it breaks lower. We have swing low here. Market structure shape, fair value gap. It trades to the fair value gap. I am not trading at this time. So again, I'm just looking at from 7 a.m. up until, if I'm trading NFP 8:30, I'm not trading at this time. In fact, I don't even promote trading NFP. So in what I'm gonna do, I'm gonna show you what happened, what Smart Money did. I'm gonna show you their footprints, what they did, and how they how they manipulated on Friday. But I'm not gonna show you where you can sell. That's gonna be up to you, to be honest. That's what I'm gonna do for this video. So only for this video, NFP, I will not be showing you when to sell. I just showed you I'm looking at 7 a.m. So I'm starting my day from 7 a.m. if I'm looking to trade NFP. So I'm showing you right now what Smart Money was doing, their footprints. So again, they trade to the fair value gap and then they break it lower. Huge fair value gap. This candle trades to it. This is a 1 minute candle, guys. 1 minute time frame. So we are like deep into the New York, almost New York open there. So it trades to the fair value gap there and then it breaks lower. Starts finding some sort of support there. Swing high. It takes that impulsively, trades back to the fair value gap. Breaks low again. What is it doing? These lows. You see how it just came to sweep this low. What it's actually doing is they were creating relatively cold lows. So they were inducing support and resistance traders to put zones and think of this as support. They were creating liquidity here. So smart money created liquidity, and then they took out this high. So they took out buy side liquidity and then traded deeper into this inversion fair value gap. So this gap here, this gap in balance, this imbalance in price, the difference between the high of this candle and the low of this candle, you draw that in time. You see price trading to it there. It doesn't trade to the top of the inversion fair value gap. So that's one signature you'll see in price. This week, the midpoint of that weeks are gaps. So the midpoint of the week, the consequent means is also a level price will trade to. So let me just put it accurately. Yeah, like this. The midpoint here, the 50 level, 14757.7. That level, you can also see coincidentally, it is the low of this. What is the high of this candle? 14757.7. Coincidentally, that's not a coincidence. That's algorithmic price delivery. Is perfect. So we'll see price trading to that here at 809, while also trading to um, the initially obviously to the inversion fair value gap, and then taking out buy side as well. Notice how only the wick takes out buy side, the body stays within this fair value gap. So that's a very significant price. It's a small significant price for smart money. So I'm showing you the smart money footprint. They break it lower, they create a swing low here at 818. There's a bearish order block here. It trades to the bearish order block. It trades to the bearish order block and above. Leaves a wick. The midpoint of that, the 50 level, 14753. It trades to it. Here, it trades to it using this big candle, comes back, trades to perfectly to this wick. This wick. Look at this, the opening price here of the order block, the bearish order block. Look how it's keeping price at the resistance. Then they break it lower. Order block here. Look how this order block is keeping the bodies of the candle below at resistance. So this is real dynamic support and resistance, real resistance. So you see the body staying below the order block there. That's a very significant price. They break it lower. Where are they taking it to? Order block. This is the bullish order block. They're bringing it to the bullish order block. So they're working from discount to premium, premium to discount within the PDRA matrix. This is what smart money is doing. On NFP days, they are most actively working now because they're manipulating it to take money from retailers. Fair value gap here, it finds support there, the fair value gap, and at the opening price of the bullish order block. Find support. That's enough to offset buy side price delivery. It starts delivering higher prices. How do you know it's delivering higher prices? It closes here, this candle goes up, all the way up, creates a fair value gap, then closes down here. The next candle, it opens with a gap. So the next candle opens with a gap. The next candle opens with a gap, confirming the buy side price delivery. So it's confirming buy side price delivery. When price comes back to trade back to the gap and create a swing low like that, smart money is buying that. But I'm not saying you buy that. It just means price is going up for a while. It might not be on the 1 minute. As you can see, it only went up for like how many candles? 1, 2, 3. On the lower time frames, that's a lot of movement, you see, on the 1 second, 10 seconds. So I'm just showing you like signatures in price, what they look like and how they form. So that gap, price trades to it there. The algorithm refers to it, finds support at it, then it goes high. Where is it going? This week, this week, let me just remove this for now. This week that we had initially left here, we left this week at 8:15. 8:15 we left this week. So weeks are gaps. A week is a gap. A week is a gap. So we treat weeks like gaps. So the midpoint of a gap, the consequent encouragement. Many times you'll see me put it as you'll see me put it as 1 minute fair value gap, consequent encouragement, CE, just so that I don't have to spell out the consequent encouragement part, which took me months to learn how to pronounce. Once you see a gap, you always want to find out what is the midpoint of the gap, which is the consequent encouragement. So the same thing applies with real gaps like liquidity voids, tails, and wicks. So we treat wicks like gaps. The midpoint of this wick comes in at 14753.1. The high on this candle, you're looking up here, the high of this candle comes at 14753.1. It is the same price to the tick, perfectly the same price. What time is that? Look at down there. That's 8:29. What time is NFP? 8:30. So what did they do with the NFP candle? From 8:29, price opened here. Doop! In a second, fast. If you don't have a 1 minute, 1 second chart, you miss out on the move. So if you're just a retailer, you are just dumb money. Zoop! Perfectly delivers perfect price delivery here. 8:29, and then this very same candle, it goes down to close even lower. It goes down and then it closes here. The next candle opens with a gap. The next candle opens with a gap. It opened here with a gap. It went up to fill this gap. Not only that, it went up to treat this gap. If you know what order blocks are, it went up to treat this candle as an order block. So it went up to redeliver to the order block. And then look what it did. Remember this relatively equal lows? I told you they are inducing people to think this is support. They trade right through those. Look what they do. Look how big this candle is. NFP. That's why I don't trade these things, guys. It's manipulated heavily manipulated. If you don't have a script for what they're doing, you have no chance. But I'm giving you a script right now, so I guess it's up to you now. This candle, the 831 candle, it opens here, takes out sell side liquidity below the previous candle, and then goes up to close higher. It creates the fair value gap. So remember now, and the difference between the closing price of this candle, the low of this candle, which is the high of the fair value gap, and the high of this candle, which is the low of the fair value gap, those created the fair value gap real time. So that's how a fair value gap was created real time. So with that thinking, when the very next candle trades back to the fair value gap, smart money, yo, they're even using algorithms to sell, so because they want to sell so fast. And then those algorithms will enter like so many trades, sell trades, as it is going up. So as soon as it enters here, they're selling, 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 selling. A lot of sales are coming into the market. Well, obviously not a lot compared to how many got in initially, but they're selling, they're adding to their more trades. It breaks lower. They take out liquidity below this low. Look how they take out liquidity below this low. So it's one, two, three. That's a three dives pattern happening on a 1 second. Obviously, it looks like it's just three candles here, but on a 30 seconds or on a 15 seconds, that's actually a trade drive pattern. So when that happens, but money is exiting the trades. So as soon as they exit, they take out liquidity there. Look what they do. They go up. Not just up to a random place. No. Not just up to a random place. When we are bearish, upward close candles are order blocks. I said this on one of my videos, I don't know which one, but I said it there somewhere. It's like a gold ticket for you to quickly land order blocks. The opening price of this order block, it traced to it there, they break it low. They created this swing low here at 834, they take it out again at 850. Sell side liquidity is taken out there. What is that? That is a swing high. It is a high which has a lower high to the left and a lower high to the right. You see, as we can see all these other highs here, they don't have a lower low to the left and a lower low to the right. They only have a lower high. They don't have a lower high to the left and a lower high to the right. They only have a lower high to the left. All these candles. This is the only one that has, that is the swing high. So a swing high, when it gets taken out impulsively, when it gets taken out impulsively with the fair value gap, with displacement, price will likely trade to the fair value gap and find support. So that's when a swing high is taken. Many times I say that is smart money confirmation of a buy program in this case. So if a swing low is taken, that's a smart money confirmation of a sell program. So you can see the buy program started as soon as this candle opened, but this swing high, that's when it was confirmed. To be honest, that's when it was confirmed, based on a basic level. On a basic level. So we see this fair value gap here that was created um, at 907 there. Price goes higher, obviously, trades to the fair value gap, and then price is higher. I just want to quickly go over this. Bullish order block here, and then takes out buy side above this high. So they create a swing high and then they take out buy side. They leave a high there. They come back, find support at this fair value gap, this old fair value gap. They find support there. Look at the body staying above the fair value gap. Then they go back to the high one more time. The bodies are obviously staying within this fair value gap here. Within this fair value gap here. So the bodies are obviously staying within that fair value gap. The one body that exit is going to the other block. They create, they inducing liquidity. Look what they create. They create like relatively equal highs to make retail traders think this is like some sort of it's a resistance level. So they create liquidity, buy side liquidity in this case, relatively equal highs. So I say many times in my videos, trade against relatively equal highs for a smart money, easy, low resistance liquidity run. They create, they create the relatively equal highs there, and then they come back and find support at the order block there. Obviously, on a day like this, they're manipulating it, but on a normal day, you will not see price trading below the main threshold of the order block. So that's why I personally don't trade these days. But nevertheless, we have a swing high there that gets taken out um, impulsively with displacement. So that's a bullish market structure shift. So that's a bullish market structure shift. As again, it's confirming a bullish buy program. Yeah. Yo, I'm tired of talking, guys. It's it's creating a buy program. Fair value gap here, fair value gap there. It doesn't trade to this fair value gap. Why? Because that's a breakaway gap. We don't expect it to trade to this fair value gap. It's a breakaway gap within the order block. Fair value gap there. Swing high again. So that's another market structure shift with one displacement leg. So fair value gap here, find support at the fair value gap. Even another imbalance here traced with the bullish order block. It finds support at the bullish order block there perfectly. Then it rallies higher. Buy side liquidity. Look now, they even created three highs at one point at this time when it was going down. So retail was really thinking, yeah, it's going down, because we have three high, strong resistance. They trade right through. Open your eyes and look very carefully. What time is that? 10 a.m. Fair value gap. Fair value gap. Open your eyes and look very, very, very carefully. That's what you're seeing. You have a fair value gap here formed at 10:12. Buy side liquidity relatively equalize. This silver bullet happens each and every single day, NFP or no NFP, as you can see. That could be your trade. So you didn't have to trade the NFP. In fact, how to trade the NFP is that you don't get caught up in this. If I was to break how to trade down the NFP video for you, I'm gonna give you how to trade the NFP video. Um, Step by step now at the end. So for those of you who are still watching, thank you for watching. Um, don't forget to like and subscribe. Now I'm gonna give you a bonus. How to trade the NFP. At 8:30, you wait for liquidity to get taken out. You see some side liquidity is being taken out here. And then you aim for opposite end of liquidity. You could wait at 10 o'clock. You could wait, be a silver bullet trader, and you don't have to be caught up in this. And the benefit of trading there at 10 o'clock is that you get to have all this previous data. Unlike trading before the big candle, you don't really understand what it did or what it's gonna do. But after it's done it, then you know it's gonna be so easy to trade against that move. This whole move, that's a Judas move. In the first part of the video, I was making it sound like you could trade this, and to be honest, you could. I showed you how to trade it, but I don't even look at that. I'm not even interested in seeing this big candle. It doesn't excite me anymore. I've seen it many times. pulling my account. But now I'm confident trading, knowing that I can trade against it. So from 10 a.m. you come into your chat and then you trading against the first initial move of NFP. That's how you trade NFP. You don't, retail traders will be trading this. Then later in the AM session, you just collect their money. Their stop losses are above this size. You just collect their money. You do this, even if you do this once a month, you guys. So you see how it works. In the first part of the video, I was just giving it to you, I was showing you. But now I'm even like telling you that what I'm giving you is gold. Market structure shift, relatively equal highs, fair value gap, trace the fair value gap. You buy that for a silver bullet. Target buy side, take that buy side. Silver bullet ends at 11. You could be done trading for the day. A new trader who trades the London close. I made a video on London close. He starts looking at his chart from 11. As soon as it is 11, he sees that at 11:03, price is trading to this fair value gap. So you don't have to trade all these moves. You really don't have to. And me, I try to trade all of them and I always get hurt. That's what I'm telling you. You don't have to trade them. Because I know from myself. But so you buy that. Trade to the fair value gap there at 11. Trade to the fair value gap there at 11:21. To be honest with you, the first part of the video had like 2 minutes that I cut out. I cut it out because you saw how I was teaching you in the first video. So in the first video, I was just like showing you what smart money was doing with their footprint, and then I decided let me just make another video and then add it to this, make it like one full video whereby I just change the rhythm. So whereby I now tell you in the first part I was showing you what smart money was doing, and then in the second part I am telling you how to take advantage of that. In other words, I'm pulling your ears. I'm trying to say this is what you should do, this is what you can do. So we have this other block here. This, remember, we're in a buy program at 11:26. We're in a buy program which started during the silver bullet, the first initial move we entered. So like I said, if we're in a buy program, um the not close candles are going to be bullish order blocks. They're going to support price. So they're going to be a discount PDRA for price to trade into. So when price is trading to a discount, like say for example, above this high is premium. So basic discount and premium. Above this high is premium. So when price is trading up here, the algorithm is trading at premium. So the algorithm will identify that and it will seek discount. So it will offer discount prices. So what it'll do, it will offer prices at a discount so that it can offer a fair market. So it will offer both discount prices, discount means cheap, and premium prices, premium means expensive, I guess. So it will offer a balance between premium and discount, discount and premium. So as it comes back to seek discount, this order block, this is an order block. I like to back the order block using the opening price because the opening price of the order block is the order block. So that's the bullish order block. The midpoint of the order block is the main threshold. Then we have the closing price of the order block. Then this order block has a tail, it has a wick. is a week. So when I'm referring to weeks, the midpoint of weeks is the coin square encouragement. So price trades to the coin square encouragement of the week of the order block. Trace to it there perfectly to find discount support. The midpoint of that is 14783. Then the low of this order block, of this candle, which is also red, meaning it's an order block also, but the low of that candle is 14783.0. So this is one shot. I don't know whether it's because of it's really 0.001 short, or it's because of miscalculation, because you can see how tight this is. But anyway, I don't care. You can see trading to it there perfectly, beautifully. Let me rather say beautifully, and then pricing high. So again, 12 o'clock I'm gonna end. Even the other video that I made, I mean the other 3 seconds that I removed, it ended 12 o'clock. So I'm gonna end at 12 o'clock because that's the New York session lunch. Ne? To you, that means the New York session end. Thank you for watching. If you like this, please like and subscribe.